These quarters. So Meta, of course, it's unbelievable, up 22%, the biggest stock move by market cap ever relative to the results that they put up. Big growth, 25% on the top line. They also put up for the bottom line 48% growth. So you finally have mega cap tech stocks really growing in a big way. Once again, they also raised relative to Amazon, the best e-commerce quarter for that company going back to the pandemic. 14% sales growth, $170 billion in sales. Apple, now they showed the first quarter of sales growth in about a year, but China underwhelming, slumping about 13% or so. Let's dig in on that Meta market cap, because if we take a
So if you don't know already, it is after the closing day on a Friday at the time of this video. Meta went up 20%. I think at the close it was up at $80. And because not only were they throwing their nets into the AI sector, but they also introduced 50 cents per share dividends for the first time ever. And let's look at this quick news about what they have to say about this stock.
Look at it. I believe it's still going to be more than $200 billion. Take a look at that. The market cap of $1.23 trillion on the day, adding more than $200 billion. That's the biggest single stock market move by market cap, I should say, ever, surpassing both Apple and Amazon, the previous big moves on good quarters. So investors really cheering not just those results, but also the, I believe, $50 billion buyback that they announced, wanting in last year's year of efficiency.
Buybacks are always good because the company believes that their shares will go up. And that's really positive news for a company like Meta. You would think that the ad business is slowing down, but it actually is not. Matter of fact, I think they got a lot of the companies from X or Twitter, because remember, a lot of people were pulling their ads away from Twitter. So, hey, they have to go somewhere, right? So, and I believe that a lot of them went to Meta.
Really paying off this year. And then let's take a look at Apple, Shonali, because while there was that slump and the stock in the pre-market had been down about 3%, the one positive thing is after 4 quarters of negative growth for sales, well, we're showing just a little bit of growth there.
Abigail, thank you. We're going to talk more about the tech industry. We're going to bring in Dan Chung, the CEO and CIO of Alder. Dan, I love talking to you about the tech industry because usually you stand against the grain. But when you were looking about what is going toward the grain here, Meta, with that more than 20% move today alone, is that as good as it's going to get this year, or do you find this an opportunity to see a longer-term trajectory here?
Actually, we continue to think Meta is undervalued. It's trading at less than 20 PE on our 2025 Alder estimates. The results were just outstanding. At the top line, growth is accelerating to a stunning 29% in the first quarter. And meanwhile, they're controlling operating expenses. So you just...
And I kind of agree with him because I know they were in the meta world, metaverse. They spend a lot of money there, but I think they're kind of slightly pivoting into the AI market. And because this year they plan to spend billions of dollars on NVIDIA in order to get their AI, investments going to be the best it could be.
Getting expanding margins and really strong earnings growth. So hats off to Meta.
Where do you think that there are relative outliers here when you're looking at such strong numbers posted by Meta and even Amazon also seeing their shares soaring on the top of progress being made by management? Are there members of the Magnificent Seven that you see lagging behind?
Yeah, we sort of think the Magnificent Seven is maybe the herd is thinning a little bit. Tesla in particular has a transition year. Apple is a really high quality company, but its top line and bottom line growth is really pretty uninteresting, and it's at a relatively high valuation compared to, in particular, the other ones that we like a lot, which is Amazon's results were also really strong. Earnings there were 25% ahead of consensus. They are GAAP earnings, by the way, so really high quality. The year-to-year growth rate is almost meaningless with Amazon because I don't think many people realize that the retail business there hasn't actually been very profitable. So it's now profitable, but as a result, they have 400% year-over-year earnings growth. So we think, meanwhile, also the AWS business is accelerating there. We see them growing earnings over 50% this year, and with a lot of room to go. The PEG ratio on that stock over the next 2 years is only a 1. Meanwhile, we think they're going to post earnings growth well over 33%. So Amazon, great company, lots of opportunity with AI. Meta also, we think, strong results. Netflix, strong results. Maybe Netflix joins the Magnificent Seven. I think it actually isn't considered technically one of the Magnificent Seven. And then finally, I should say Microsoft. Microsoft reported much earlier, all around stellar results, clearly benefiting from AI. Mm-hmm. The amount of business they say driving AI there is basically growing at an exponential rate.
Inside.
So with the Meta introducing the 50-cent dividends per share, that will equal to a payment of $700 million a year that Mark Zuckerberg will be getting from his company. And I think Mark Zuckerberg currently owns about 350 million shares of Meta. So that'll be about $175 million each quarter payment for him before taxes. I mean, that is some payment for a CEO, but it's not really more of the payment, but it's more like dividend offers. And I'm sure other people in other companies are getting, I don't think quite as much, but they're getting a lot more money because of dividends, because they own that much money, because they own that much shares of a particular company. I just wanted to put that out. So thank you again for watching. Have a great day. Peace.